Which is a better measure of valuing PE or EV, EB, EBITDA? बॉस हमें तो पता ही नहीं है ये पीई और ईवी EBITDA क्या होता है. Worry not, we are going to cover everything in this video. So let's get started. Which is a better measure of valuing PE or EV EBITDA? While valuing companies, analysts use different methods to determine if a particular company is undervalued or overvalued. And yeah, and the two most common commonly used ratios are PV ratio and EV EBITDA ratio. So before understanding which one is better, let's understand these ratios. So the first one is PE ratio. PE ratio is calculated as share price divided by earning per share. It measures the money that investors are willing to pay for every rupee a company earns. So now let's talk about what are the drawbacks of PE ratio. The drawbacks of PE ratio is that it compares the price of a share with that of earnings that are available to shareholders. So it measures only the equity value of the company and it ignores the debt component. So companies that normally have high debt get low PE ratio. Second, the PE ratio is influenced by the market perception because the price of a share is determined by the investors and therefore some companies may get a higher valuation than others. For example, that are high companies that are high in growth sectors and have disruptive potential may get a high valuation, or companies that have a good brand value and reputed management may be valued higher than peers. The third is P ratio by itself does not convey much unless it is looked at with reference to growth. The next coming up is EV EBITDA ratio. This ratio basically has two components, EV and EBITDA. EV here means enterprise value. It is basically the total value of the company that someone would have paid if they would have to acquire the firm. So let's now understand this with an example. Say you buy a shop which is at rupees 10 lakh rupees. The seller of the shop has taken a loan of 2 lakh rupees for the maintenance of the shop, which you would have to pay in case you acquire the shop. Also, the shop has tijori, which has around 3 lakh cash, which you would get in case you buy the shop. So the actual value of the enterprise of your acquisition would be 10 lakh rupees plus 2 lakh for the maintenance of the shop minus the 3 lakh which is already in the tijori, which would come to around 9 lakh rupees. The other part of the metric is EBITDA, which is also known as operating profit. It is basically the earning before interest, cost, tax, depreciation, and amortization. Now we come finally to understand which one is better. PE is a good measure of valuing the equity of the company since it considers the EPS as the denominator, whereas the EV EBITDA is better measure of valuation, especially when one is looking at merger and acquisition. EV EBITDA is basically ideal for valuing companies in telecom sector, cement and steel sector, as companies in these sectors carry a high debt in the balance sheet and have high gestation periods. EV/EBITDA is also a better measure when valuing companies that are making losses at net earning level while their operating profits are positive. Last but not the least, the PE ratio is a better measure by valuing companies in industries where the growth is high and the industry is not capital intensive. That's all from my side. Happy learning and do stay connected. Thank you.